Bullish momentum, which began at last Friday's low just below the 6550 level, continued today with the S&P up 0.91%, closing at 6765.88. We're back in positive gamma exposure territory, as well as above several of the major shorter-term moving averages that we like to keep an eye on. Gamma exposure has shifted from the 6700 strike up to the 6800 strike as the largest GEX concentration, and we see price continuing to move higher towards that level. We're almost there, only 35 points away on the S&P. If we zoom out to the daily candlestick chart and just take a look at the current structure, we're well above the 50-day EMA, getting up into our upper dealer cluster zone. Obviously, that's shifted a little bit higher over the past couple of days. This is an area where we could potentially see some resistance or consolidation right around that 6800 strike. You can also see this is an area where we hit resistance back during the month of October on a couple of rally attempts above that 6900. Sellers jumping in, taking profits, as well as dealer selling pressure ramping up above those levels as well. But the overall trend in general remains to the upside despite the dip that we've seen over the last few weeks. Gamma exposure skewing to the upside as well. And if we just move up to the top of the options chain here, you can see gamma exposure beginning to reassert itself at the 7000 strike. We actually had quite a bit of volume coming in the options market at that 7,000 strike this entire period over the last several weeks during this pullback. That gave us a lot of confidence that this 7,000 target could potentially still be hit before year end. And in fact, today alone, we saw over 100,000 contracts traded at that 7,000 strike. So that's a big target. You know, we talked in yesterday's video about the difference between the 6,000 target and the 7,000 target, two of the larger gamma exposure levels. Basically price sandwiched in between that level here near the lows that we saw just a couple of days ago.
Thanks, Anthony. We were on our live stream this morning when we noted that IWM was actually positive while QQQ was negative. And let's take a closer look at QQQ because it ended up turning around and seeing some positive movement following in the footsteps of IWM's early signal. And I have the weekly chart pulled up. You can see today's rally brought QQQ to just over the 9-period SMA at 606.70. We had expressed some caution that might be warranted based on last week's close below the 9-period SMA for the first time really since before the drop into April started. Bulls will want to see this breach hold as we complete the week. And the next resistance up is this 615 GEX cluster. There's positive and negative GEX at 615 with a declining whole moving average currently just below 617. Within the next day or two, this will likely cross and meet this 615 GEX. So if we do see continued upside, it wouldn't surprise me to see resistance at 617 and then possibly a retest. Now, what bulls will want to see if that happens is for a retest of the 607 area to hold and then allow QQQ to continue higher toward these other targets beyond 615. Another concern when comparing this to the weekly chart and that breach, we're a little bit stretched above the daily whole moving average. That's quite a bit of distance above it. We've seen a solid downtrend. We did see GEX improve to positive territory now, and we just need to see continuation of that to have more confidence that this low from last week is a low that will last potentially into the end of the year.
Thanks, Sean. Next, let's take a look at Amazon. Amazon up 1.5% today, closing at 229.67. Just above its 50-day EMA, which is currently sitting at 229.30. That's that red line here on our chart. You can see the gamma exposure structure is skewed largely to the upside. We've seen the strikes between 230 and 240 really come into play over the last couple of trading sessions as Amazon saw buyers step in below the 220 strike just a couple of days ago. Look at the volume in the options market, all the volume at 230 and above. And this is big volume for Amazon, 100,000 contracts traded at that 230 strike. And a lot of these out of the money strikes seeing big options volume coming in, over 50,000 contracts at each of these higher strikes here between 235 and all the way up to the 255 strike. And we actually have a position in Amazon in both of our portfolios. We sold iron condors back on November 18th. In this particular portfolio, we sold 3 of those iron condors in the December 19th expiration, targeting the 220 to 250 range. So you can see we had the 220, 215 put debit spread and the 250, 255 call debit spread, making our iron condor structure. And ultimately, we received $2.24 in premium. And so our overall thesis for this particular iron condor trade is basically that we expect price to stay between the 220 and the 250 strike, as I mentioned, and look at all this gamma exposure. Most of the gamma exposure, I would say 80 to 90% of it, is between the 220 and 250 strikes. So as long as price trades anywhere within this range over the next 2 to 3 weeks, we're likely to collect some really nice premium from those iron condors that we sold, hopefully closing out somewhere with price between the 230 and 240 zone. That would be the sweet spot. A lot of these iron condors, especially with the higher VIX, are giving us some really nice premium and really wide ranges like what we're seeing here with this Amazon iron condor. By the way, if you want to track our trades in real time as we manage our options portfolio, you can become a member at geeksoffinance.com. We actually have a Black Friday sale going on right now. You can also get a sneak preview of what we're trading right now by checking out our community Discord. Absolutely free. I'll put links in the description below to both of those so you guys can take a look.
All right, let's take a look at the VIX, which is still in the house of pain, to borrow, I think, an old Jim Cramer term. We saw a dip all the way down to 18.5 today, 1856, and that breached the 9-period SMA. We had mentioned that 18 was our target if we saw the 20 area breached, and sure enough, we definitely got there in a hurry. The middle Keltner channel on the weekly chart is currently at 1857. I think one issue that the bulls have at this moment is that we've seen such a VIX crush so quickly that we're already back near this support area again. I said the exact same thing near the end of October after we saw that spike and that crush that ended up being pretty close to a bottom, and then we saw the VIX ascend again to a new high. So I don't know that that's going to happen this time, but I do know bulls are not completely out of the woods. We still don't see very much GEX below the 16 and 17 strikes especially. Let's take a quick look at the smaller time frames. The VIX is close to the bottom of the 2-hour Keltner channel. Now the 4-hour Keltner is actually closer to 17, so we could see the VIX continue lower. And if you look at the last time we saw the Keltner channels in this steep of a downtrend, like we see here with these blue lines, that was after the spike all the way back in October. And you can see that basically, even though we had spikes along the way, the strong downtrend in the Keltner channels essentially resulted in the VIX resolving lower each time until we saw things finally flatten out and start to increase again. It's a little early to be calling for some sort of a major trend change again with the VIX. We may see further crush before a sustainable turn higher in volatility.
All right, next let's take a look at Meta. Meta up 3.78% today, rebounding nicely from below 600 just a few days ago, closing at 636.22 today. And of course, as we've been discussing quite a bit in our YouTube videos recently, as well as in our live stream, Meta has just been one of the dogs of the Mag 7, breaking below its 50-day EMA following its earnings, with Meta continuing to sell off. So nearly a 200-point sell-off over the course of the last 6 to 8 weeks, where it nearly peaked at 800. That was actually a big target of ours throughout most of the year. But interesting, though, where buyers stepped in just below the 600 strike. One of the things we had been noting is gamma exposure really almost non-existent below that 600 strike. So when we saw that dip below that level, very little activity in the options market below 600, that gave us a little bit of an indication that there was likely a bounce coming. Now, how far can this bounce potentially go? We have the rapidly declining 50-day EMA. That's eventually going to reach the 650 level here in the coming days. We also have positive gamma exposure growing pretty rapidly here, all the way up to the 700 strike, and that's right in the middle of this big gap left over from the previous earnings release. So our first target on this mean reversion is probably the 650 strike, with a lower probability target of reaching the 700 strike. strike. So far, we've stayed away from this name, wanting to see momentum returning. It does look like an attempt at a V-shaped recovery is underway. We'll see if that continues, but basically a move to 650 is a pretty high probability play in our view, with a lower probability move to potentially up to the 700 range.
Thanks, Anthony. Let's take a quick look at Google. Google's been on quite a tear lately, rallying strongly off of positive news surrounding Gemini, and we've seen GEX increase as well. So as we flip over to the chart, it is interesting that the GEX high was 2 days ago. Well, that actually was a little bit predictive. It was right before this huge gap up. And since then, we've actually seen GEX decreasing. And I just wanted to point out a couple of things about where Google currently sits. You can see we are right at the upper dealer cluster zone, which is this big 330 strike. And the upper dealer cluster zone is where we would expect dealers to potentially become sellers, and that could result in price consolidating or possibly dropping from here. The chart is certainly bullish, and at this point, what I think makes the most sense is that we could see a drop back toward this 300 area, which is where the rising whole moving average is, this yellow line at 299.85. That would fill this gap and also allow Google's price to contend with this very large positive GEX cluster at 300. So that would be kind of a natural spot for a reversal.
And guys, our Black Friday sale is in full swing. For this week only, you can get an additional $400 off our yearly Portfolio Manager tier subscription. Use code BlackFriday25 at checkout. As I mentioned, this discount is ending this week, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can take a look. Thanks so much everybody for watching, and we'll see you guys in the next video.